The top three things in Keith's notebook this morning are as follows. Number one is the NASDAQ. We learn a lot more from developing bears and the bounces than we do in the drops. Yesterday, obviously, was a pretty ineffectual bounce. Two things to note: our bearish trend of resistance of 42.03 on the NASDAQ remains intact. And the second thing is the QQQs just registered a lower high in one of the worst volume Wednesdays of 2014, so very noteworthy in our quantitative models. And both A and B aren't good for the outlook for tech stocks. Second thing in Keith's notebook is the U.S. dollar. As we noted yesterday, coming into the day, Yellen was going to be speaking, and obviously made dollar devaluation comments. In effect, she's encouraging more of what's already been slowing growth, which is monetary inflation. Yesterday, that kept the U.S. dollar under selling pressure, and we're seeing the same this morning. So 4 months into the year, we haven't really seen a slow-moving train wreck like this since 2011. The outlook, I think, for growth and equities is diminishing the more we get this dollar devaluation rhetoric. Third thing in Keith's notebook is the UST10YR, and obviously this has been in the top three pretty consistently, but is an important macro indicator to focus on. The reality is if we're going to see a rally, we'd expect bonds to sell off for real. In effect, if the social media bubble was going to bubble up again, then bonds would definitely be selling off, but that's not what's happening. 10-year yield actually closed down 2 basis points in the last 48 hours. This to us is a clean-cut U.S. growth signal that should have legs, once again well into Q3 2014. And those are the top three things in Keith's notebook.